right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito. We have a very interesting guest with us today. We have Hoa Nguyen. And I wanted to have Hoa on the show here because we met at a family office event, actually, Jaboy Productions, which is a great event. And I was impressed with your speaking. I was impressed with your experience, your story. Really an incredible life story. It's fun. You get to know each other at these events. You have a chance to kind of talk and mingle and hear each other's backstory and learn about your lives. But not only have you built an incredible real estate portfolio, but you've also you have a number of businesses, and you've kind of incorporated this all together as an entrepreneur and an investor. And now you speak about it at high-level events as well. So I was very impressed when I met you, and I wanted to have you on the show here at the Passive Cash Flow Podcast. So thanks for joining us today. Wow, how are we doing?
You're doing great, Aaron. Thank you so much for having me on your podcast today. It was absolutely a pleasure hearing you speak, and I was inspired and impressed by your speaking at the event. So thank you.
Thank you. Thank you. I love speaking, as many people who know me know. I could just speak for hours and go on and on and on. And but that's why I have a podcast. So if you like to talk a lot, create a podcast, get it out of your system, And but no, that's great. Thank you so much. I really enjoyed the presentation I put on there, and I liked hearing from you and all the speakers. Actually, it's a 2-day event. But your story really caught me. From your personal story, of how you from a little girl to where you grew up today now, and as an entrepreneur, and but also juggling, an eye for real estate with your eye doctor business, and I think that's a good title for this one, an eye for real estate. So what kind of gave you that first real estate bug? What got you into real estate investing?
That's a common question because most people were like, wait, you're an eye doctor and you're heavy into real estate investing. And how did that happen? But about 9 years ago was when my daughter was born. Athena is her name. But as doctors, the pain point is, time freedom and having flexibility of wanting to be able to spend more time with our daughter, even though we had 2 practices working full time, I was still hustling 60 to 80 hours a work week, right? My husband and I are both eye docs, and managing and running 2 private practices is like above full-time job. Yeah. And so we wanted to venture, and we heard about real estate investing, but it just never took, the leap. And so after our daughter was born, we heavily immersed into learning more about different asset classes, started investing passively into multifamily, and then really leveraged that income to start hiring associate doctors to help so we could kind of take off some of our time to be more with her. And then that's how we kept growing our real estate portfolio.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, that's what it's all about. That's where I get a lot of my motivation from as well. My son, he's 2.5. His name is Dean. And that's what I love about real estate. I just feel like it's a long-term investment. It's a brick and mortar asset. There's so many things we own in this world that are not going to be around 100 years from now, and have value as well. Now, even some of the buildings we own, right, might get knocked down or rebuilt, or, but the land, the value of real estate tends to really remain intact for a very long period of time. It creates a value in our community, a place for people to live. On top of the returns it creates, of course. But yeah, that's great motivation, to have to want to have that financial freedom, to have a little more time to spend with your children, because you only get so many good years with your kids, and then they're going to be annoying teenagers, and then they're adults, and they're young adults, and they know everything, and then you kind of become friends with them again in their 30s. But but no, the whole process, you want to be a present parent, you want to be there for those amazing years. And so that's a very common reason to want to start investing in real estate and creating that passive income. So that's interesting. Now, so you were an eye doctor there. Are you still an eye doctor, right? And you also have an interesting part of that business where you actually sell a lot of eyewear. Is that correct?
It is. You know, Jaime, who's my husband, I met him in optometry school. So we've been practicing for 18 years now in the Dallas-Fort Worth area.
Wow.
And so we used to work about 6 days a week. Now, I work maybe one day out of the week, by choice, right? We have three other associate doctors. My husband also is a doctor. He works 2 to 3 days out of the week. I do one day a week. But, we have full scope optometry. So it's medical and then very unique eyewear, right? But now what's the beauty of real estate is it's allowed us to have more flexibility of time. So we're working on our businesses instead of so immersed in our businesses. And real estate being an additional vehicle, in addition to multiple other businesses that we run and kind of oversee.
Mhm.
It's allowed us to travel the world, which is a big passion of us, to do charity work and travel with our daughter to kind of get the full immersion of contrast, which is hard for her to get living here in the States and not seeing contrast like how we grew up. And so
Right.
that was really important for Jaime and I. How do we incorporate our philanthropy love and being able to all the things that we've been able to build and accumulate? How can we give back, but be our daughter, be a part of our mission, right? And
Mhm.
so that's been something that, we're so blessed for her to be able to see firsthand.
Absolutely. I was a member of a number of different Rotary clubs through the years and learned a lot about philanthropy that through that process, and also just working with high net worth individuals and family offices and seeing the impact they have on with their capital is one of the things that really inspires me to build wealth, and I possibly have a family office one day myself and be able to really give back in so many different ways, consistent giving, but also sustainable giving. That's something I'm looking into a little bit more, not just writing a check to a nonprofit, but actually giving in ways that creates consistent giving and consistent returns so you can actually reinvest that money as well. And right now we're working with an ESG lender that works with multifamily offices, and they invest in this ESG loan. They create consistent returns for themselves, but they also have a positive impact with those ESG loans that are low interest and high loan to cost, and allow these projects to happen that normally wouldn't, that have to create a certain amount of community benefit. And the bar is pretty high. It really creates a lot of community benefit as this development is that we're working on. And but that's a really incredible way to give, because now they actually get that capital back at some point, and they can lend it again in another project and another project. And you can create so much more of an impact by investing wisely and sustainably. And that's becoming a little more popular sometimes than, there's also different opinions on giving so much to a market. There's stories of like flooding different like African countries with all this grain or something like that. Now the people who sell grain are out of business, so like there's different, you got to look at the entire impact of giving, and how you're giving. So sustainable giving and kind of giving with a long-term mindset is something that I really find very interesting personally. But showing your daughter that a level of philanthropy, and explaining the impact you can have with wealth. It's not just a fancy car, a big house. It's actually where you can really have a very incredible impact on the world around you. So great lesson for a young kid to learn, and for us to learn as adults too, probably, right?
No, we love that. And we've been able to meet so many amazing people and business leaders all around the world to be able to collaborate for many different reasons, right? Just to do life together, to do business together, to do philanthropy work together. It just opens up so many more doors, and it's so much more fulfilling in all different levels.
Absolutely. Absolutely. No, I love that. And so you're working as an eye doctor, you're working 60, 70 hours a week. You're building your business. And then what was your first real estate investment property? How did you kind of take the plunge there?
So we did it the hard way. This was In 2015, the first property we bought was in overseas in Belize, one of the smaller island called Ambergris Key. The town there is called San Pedro. I went there for a girls' trip, and I called Jaime that night and I said, we're buying something here, right? And mind you, we had not done real estate investing. The only type of real estate asset we owned was our own primary home.
Right.
And so he was like, wait a minute, you don't even know anything about investing much less overseas.
Mm-hmm.
I saw a lot of opportunity when I first went over there. And I said, give this place 10 or 15 years. I think it's going to really flourish, and it has great potential. It has everything that I really would love to see. And sure enough, we went back and forth. We did a few real estate field trips, got to know the brokers, spoke to a lot of the locals, kind of see what the market was doing as far as rents and what kind of hotels and kind of what the growth was. And so that we took the deep dive. We bought our first lot of parcel of land, hired an architect, and built a home there. We figured it could be a vacation home. And then when we were not using it as a vacation home, we would rent it out and hire a management company there locally on the island. And so that's how we started. We built a home, rented it out short term, decided to also invest in the first branded resort on the island. And so we did, that was our first world and taste into the world of syndication. That was in a resort. And then we started buying 3 other parcels of land so we were very heavy in Belize because we didn't know about multifamily and all of that yet.
Right.
We started learning about multifamily in 2017. And so that's when we kind of pivoted and went full force into multifamily.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Okay. And you primarily invest in the Dallas-Fort Worth area now, is that correct? Or what areas do you invest in?
So the majority of our investments are Texas heavy. So they are Dallas-based. Houston are the bulk of it. We are in San Antonio, Amarillo. We have one in South Carolina and then Phoenix. But the bulk of it is Texas-based.
Okay. All right. And now you work as a syndicator, is that correct? You pool capital together with passive investors and buy apartment buildings?
Correct. So we started going active. We were passive investors back in we started our first passive investment in 2018. And then in 2020 is when we started becoming active partners.
Okay. So how did you make that plunge from being, well, I guess you kind of had some active experience in Belize there with the short-term rentals and the land there. By the way, how do those investments turn out? Is Belize a good place to invest? Was that a good ROI?
Yeah, so that was a long-term strategy. We had no partners and no investors. This is solely Jaime and I's money. The drawback is it was all cash, right? The financing over there is like 13 to 14%. And a lot of times for land, they don't allow us to finance that. So we parked a lot of cash. So the good thing is there's no capital gains tax. The property tax is dirt cheap. I mean, we pay about $200 a year. And to run the management, they take about a 20% cut, but it cash flows nice, right? So it's a legacy asset. It's named after our daughter. We go there every few months. And so the investment there has done well. The resort investment, it didn't cash flow because the resort has such high overhead and it took a lot longer to develop out. Right. And so this is 9 years later before we're even seeing cash come from that project. Right. And so was that the smartest investment? No, but we didn't lose any money. We haven't lost any money in that. It's just we're only now they're selling some of that off where they're returning a lot of the capital to us. But, that one probably is not the best. And we have 3 other parcels of land we haven't developed out. So that's future development, right beachfront. And so that's long-term play.
Interesting. That's fun. And the value of land, if you buy, especially beachfront, you buy and hold in the right areas. We do that with some land, and it's pretty relatively low holding costs. Very taxes and insurance are very low on it. If you don't leverage it, then you have no interest and mortgage payments. So, yeah, so that is an interesting strategy. I know people that do very well with land, especially if you get it developed. I would say, you do have to buy in the right areas where there's kind of growth going on around there. But at the end of the day, my favorite asset class is multifamily as well. There's really hands down no better benefit multifamily mixed use real estate. You get, the tax benefits, the cash flow, people need a place to live. You're much less likely to lose money on it if you buy for the right price and manage it well. Land, our land investments, they just take a long time to kind of come to fruition. We usually don't bother with actually developing them. We just kind of buy and hold, and then over time the value grows and we exit, one by one or so. Maybe we'll buy a bunch of lots at an auction. But listen, we've all made those investments that, looking back, Monday morning quarterback, you say, oh, that wasn't a good one. And we still do that. We buy and sell so much real estate. There's stuff we'll buy at auction. We'll be like, yeah, I probably should have passed on that one, but hey, we'll squeeze 10 grand out of it or something. So you have your big wins, you have your singles, and then you have certain things that will break even sometimes as well. We do so many different transactions, especially with our debt fund, smaller transactions too. But so, all right, that's interesting. So then you kind of migrated into the syndication space. And then as far as in the syndication space, do you hire third-party management companies to manage it, or how do you handle the management of these assets?
Yeah, third-party management is for most of these properties. The first time we started going active, we did partner with a couple that they're vertically integrated. And so the first 3 projects that we partnered with them, they were vertically integrated. And after that, currently we have 13 projects that we're general partners, and then 28 that we're passive investors in. Wow. And so we still heavily invest passively in a lot of different assets, and the bulk of it being multifamily. But majority of the things we do are third-party property management.
Right. Now, are you seeing more opportunity in the marketplace as rates have been high now for about a year? You're seeing prices come down, and in the markets you're in, what are you seeing out there?
Yeah, it's, we bought a really good deal. Like 2023 was really slow as far as deal flow. We're very conservative, right? We did find a winner steal deal in the end of 2023. We were able to close one that we partnered with. We've done 3 different deals with them as well. And it's an A-class property, A+ class property that we've already had properties locally there. And the year prior, so 2022, it was selling for $226 a door, the neighboring property, same vintage, same size. We bought it for $143 a door. And so significantly discounted, distressed seller. They were just bleeding too much, and they had to let it go. But are there opportunities? Yes. Is deal flow down? Absolutely. The pipeline has opened up again now, right? I'm seeing a little bit more. Absolutely. This quarter, we're seeing more deal flow. Nothing has quite penciled out. There's one that's a potential, but with interest rates and things of that nature, and what truly pencils out, it's definitely tougher than it's been a few years ago, right? So like last year, we only did one multifamily project, where traditionally we were doing about an average of 4 a year.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Wow. Yeah, I'd say I'm having the same experience as well. We bought one apartment building last year. We try to buy About 2 to 3, depending on, what the deal flow is, but you can't force it, right? Our job is as real estate, as general partners and syndicators, to make the right decision, do the right underwriting, be conservative in our assumptions. And boy, you just cannot force a deal. If the flow is not there, if the opportunity is not there, then you just have to keep on underwriting and keep on building relationships to attract those types of off-market, motivated sellers, discounted properties for sale. Maybe try to get creative. One thing we've done is start teaming up with very good builders and developers that have ground up development opportunities that qualify for special types of debt that come in at like 5% interest. Because, for example, this one's it qualifies for an ESG loan because it creates enough community benefits that it qualifies for the special type of debt. So we're putting together a capital stack for a 420 unit residential development and about 25,000 square feet of retail space. And it qualifies for this special type of debt, 5% interest only for 10 years, 100% loan to cost. So we can really leverage our investors' capital quite wisely on this one. And so that's the type of deals we're looking for. They're a little more unique. That's not just like a discounted apartment building. You put some lipstick on a pig and increase the rental amount, and now bada bing, bada boom, you got yourself a new piece of real estate you can refinance out for 2 2.75% interest rate, like there was in the good days. But it's probably good that slowed down. Like that was never sustainable for the long term. Now I think patience is rewarded. I mean, patience is generally rewarded in a business, but now I think more than ever, the ones who can be patient, who can kind of, what do they say, survive to 25. We're trying to thrive to 25, but we are just like this week. I got about two or three interesting deals I need to find the time to underwrite now, and probably toss it up to my team to start digging in more depth. That it's kind of the deals are starting to come out of the woodwork. The cap rates are getting higher, the prices are coming down a little bit. Most people that are selling are trying to offer some type of bonus, offering there, like maybe a discounted price or assumable debt, or good amount of value add. Some stuff that's sitting on the market that's overpriced isn't moving. So yeah, we're looking. Where I'm seeing some value is like the smaller apartment buildings, like 20 to 40 unit deals. I don't know, maybe it's just this week. I don't know, for whatever reason. I've just kind of been finding some smaller to mid-sized apartment buildings and thinking, maybe we'll package together, 3 or 4 smaller apartment buildings and do a fund for that, as long as they all pencil out properly, and even possibly accept 1031 capital, do a tick, because we also have a lot of investors looking to 1031 capital kind of all of a sudden. So just getting more creative, right? Finding deals in different ways, thinking about them in different ways, getting into real estate development with really great builders and developers. And that is where the deals are made. That, I always say, we always say here at People's Capital Group, a good deal isn't found, it's created, right? It's created by negotiating with the seller, underwriting it in a different way, figuring out ways to, create more benefit for the community and development, so it qualifies for the special type of debt that and allows you to do this, or bringing in 1031 capital that requires perhaps less aggressive returns. Different ways to kind of think creatively about your fundraising, your deal structure, who you're connecting with, who's bringing you deals. And we'll see if rates stay high into 25, maybe I'll have to be less creative and there'll just be more deal flow, more opportunity. But I mean, the demand for good deals right now is, the auctions are still very busy. They're still overbidding on properties. So it just hasn't quite turned to a buyer's market where we are here in North Jersey. But what are you seeing there? You feel like it's a buyer's market yet, or still a seller's market?
Not yet. There's still a big gap.
Mm-hmm.
There's
Yeah.
still a big gap as far as what the sellers want and where we are willing to pay, right? So
Mm-hmm.
I think being patient is key. We haven't bought anything this year yet, right? And so unless it pencils out, then we keep going at it. But it's not quite a buyer's market yet.
Mm-hmm. Mm-hmm. Yep. Same thing I'm seeing. It's this like lingering seller's market where you're kind of still getting the price you want, which, I mean, we just list, I play both sides, right? I just listed a 6 family for sale because we look at all of our assets as the year goes on, and we usually harvest our bottom 10%, properties that are kind of ready to be harvested and sold, or, kind of smaller assets we want to sell, or just, properties that's time to sell them. So we're always kind of consistently looking at our assets and selling them. So here I am, being a seller, trying to get this low cap rate, make my beautiful properties sell for as much as I possibly can. And the bids are out there, the buyers are out there. It's not as strong as it was a year or two ago. But then I also play the other side of the table as a buyer more consistently, I'd say, these days, trying to buy properties for good prices. And but yeah, it's at that kind of almost an equilibrium, I guess you could say, at this point. It just kind of, but I think it's leaning back towards the buyer's market again. It really depends on probably the election in November. I think where interest rates go, a number of different things. So we shall see. But what are your tips for people that are saying, okay, I've seen people make good returns in real estate. I haven't quite taken the plunge. What the heck do I do now with this weird market of high interest rates, high prices, and everyone's a real estate syndicator? What do you think? What's a good way to kind of get into real estate at this point?
It's that's a great question, because it's like everybody's putting deals together, where some people, and it's such a people business, the level of experience and the ethical value is so core. It's like you bet on the jockey, right? And so I think getting to understand people who are actually in the business, who have expertise in operations, is so important. Not just the operation aspect, but who understand debt structure, who understand contracts, who have good teams in place, who have local boots on the ground. Like, I think, to me, investing in so many different assets myself and partnering with so many different people as well, it's really critical as an investor, especially if you're going in as a passive investor and there's so much advertisements and things that are being bombarded out there, to be able to get educated, to understand, at least on a high level, what the assumptions are in underwriting. And when people send you a pitch deck, or performa's always going to look good, right? No one's going to send you a pitch deck that looks bad, right?
Yeah.
And, pictures too. It's like, unless you understand the submarket and you drive by the property, everyone's going to give you pretty pictures. Everyone's going to give you a fancy resume of who they are and what they've accomplished. So I think as an investor, you do have to have a level of sophistication, of education, to understand, at least on a high level, what debt is it, a high risk situation? What type of submarket? Is it high crime, or is it, what's the business plan, and what's the expertise? Like, who really is going to be doing the execution of the operations day to day after this? And even if it's like you're just hoping the management team is going to run it, no, it's not good enough, right? So I think it's really important that, does the core person that you're investing with actually have a good track record? And even if there's challenges, even if the track record is, hey, there are some challenges, is that actually disclosed? And is there a level of just transparency and communication during those challenging times? So I really think investors need to understand that, right? That not all operators are equal, or not all syndicators are equal, and to be able to be educated enough to ask the right questions, but also to take action, because you can never quite time the market perfectly. There's always still a level of risk, but how can you mitigate some of that risk? And ask the person, if you're going to invest with, what are some of the challenges, and how have they mitigated some risk and through hard times? Because if you've been in the market long enough, you're going to experience some challenges. And if you're newer, then you may not have experienced some of those challenges, but at least have they partnered with someone who's experienced some of those challenges, and how do they get to that point? Because everybody rides the wave when it's dandy and it's all rosy, the market's hot, everyone's getting good. But when there's challenging times like 21 and 22 and things of that nature, how are they dealing with that? So that's the tip I would give to investors, right? But take action, absolutely, but get educated.
Yeah, absolutely, 100%. No, I love it. I agree, Dr. Hoa, I absolutely agree with what you're saying there. So that's great. So how can people reach out to you and connect with you?
They can get on our website, Blacksteel, the number 23.com, or be the one, be like the word be, and then the word one, 23.com. So because I also speak a lot and things of that nature. So I just like the 23 is because it's my lucky number, in case you're wondering what's the 23.
I was wondering. Okay, there you go. That's a good lucky number. There you go.
It's a symbolic angelic number. If you look up the number 23, positivity, transformation, and inspiration, it's a very meaningful number to me. But I'm also born on the 23rd, so that's why.
All right. Makes sense. Makes sense. Okay, well, I'll check that out. No, you're a great speaker. So if anyone's looking for a good speaker there, check out Dr. Nguyen. She really knows her stuff, and you can talk about a number of different topics, you know, from entrepreneurship to real estate to having an eye for real estate. And we didn't even get into your story of escaping Vietnam, right? As a refugee.
So my parents actually fled Vietnam after the Vietnam War, and I
Yeah,
was in a refugee camp in the Philippines. So
right.
I came to the US when I was about 8.5 years old. So it's been a long journey.
Oh my gosh. Look at you now. Oh my gosh. That's incredible. Well, thank you so much for coming on the show. I really loved meeting you at the event. I loved doing this podcast here with you, learning more about your strategy and how you work with investors and build your personal wealth and your investors' wealth and your why, right? It's all about that why also. So I agree with most everything you said there. So really, really interesting stuff. And so for our listeners, hopefully you enjoy this content. Remember, if you're enjoying it, to like and subscribe and share it with someone. You know, sharing this content is an important thing. Get it out there so people understand what we're doing to syndicate and build wealth and create an impact on our communities. And it's an important thing. So you have that time to spend with your loved ones. And that's what it's all about. That's our why there. So thank you so much to our listeners. And of course, I'm Aaron Fragnito with People's Capital Group, and we'll be coming out with another episode next month here, the Passive Cash Flow Podcast. You want to learn more about how we help people build their wealth in real estate. We've been doing that for over the last decade. Go to peoplescapitalgroup.com. You can check out more of our content there. We have blog posts. We have other podcast episodes. I think this is like number 160 at this point. So check out our other episodes there and enjoy our content at peoplescapitalgroup.com. Thanks a lot.